Hey, good evening traders, it's Mark here. It's 9:48 p.m. in the UK and we have had a very interesting day in the markets. We're continuing to see the 10-year yield rise. We're heading up to the well, is it going to be the important 3% barrier? We're going to start to see price reject this area. And if we are, then we should potentially start to see some yen strength come back into the market. So as yields are increasing, obviously we're seeing a bit of pressure now with the forecast of interest rates moving up. We're seeing stocks getting battered today, or indexes getting battered. The NASDAQ in particular 2.2% down, the Dow 1.1 and the S&P 1.66. Gonna have a look. There's a couple of critical areas to watch for on the index charts. So we're going to see if these are going to hold at some point. You know, we've got the CPI data coming out tomorrow. So that could be a catalyst to potentially push through those barriers. And then maybe we get the dead cat bounce and we see buyers come in. So let's just take a look at what could potentially happen right now. So we're watching this key area here, 3% on US 10 years. Now, potentially we could see the market push up into here and then start to roll over. Then what would that look like on the indexes, and what could we potentially see? Well, if price does start to roll over here, then expect to see bonds start to take a push higher. So if we just take a look at bonds, we'll probably see bonds maybe coming down towards the 137 in and around this area here. If we just have a look, we can potentially maybe look at a very long-term trend line that might have some confluence coming in that 137 with this major swing low here. So tying that all in, you've got monthly S2. I don't know if you can see it. Let me drop down to the weekly so it'll stand out a little bit more. You can see the S2 just through here. So if we just pop a little zone through there, you'll see the monthly S2. So that ties in really quite nicely with major swing low, monthly S2, and then correlating that with the 3% on the US 10-year yield. So watching for some buying to come back in here, but it's a bit of a bloodbath at the minute. So where do we look at on the indexes for buyers to come in? So we're going to start with the S&P. S&P, I think really the first area we need to look at, we're staying on the weekly chart, is around the 4400 area. And the reason I'm saying that, if we look at it on a weekly perspective, if we just highlight, we've got the swing high, swing low, higher high, then the market puts in this lower low, then we have a lower high, again another lower low, then we have a potential shift in sentiment where we have a higher high. So in essence, we need price to hold somewhere, whether it's here or a little bit lower, to form that weekly higher low before we then get the next move up, before potentially the summer doldrums and we start to see the market sell off in that seasonal period around June, July. Now let's drop down time frame a little bit. You'll see today has been a very strong bearish candle. Now a strong bearish candle doesn't necessarily mean that we're going to get a continuation of sellers flood the market. Sometimes where you get strong bearish candles, strong bullish candles, especially if they're approaching key levels of support or resistance, demand and supply areas, then this can be an exhaustive move. So don't be surprised if the CPI data comes out tomorrow. We see that push through maybe 4400 down to 4380, and then buyers step in. So I'll be watching this area very closely. Alerts are set, and I would actually prefer to see the market penetrate that area, go below it, and then start to see a shift in sentiment, a change in cycle, and then we look to move the market higher from there on. If we take a look at the NASDAQ, something very similar. We're still on the weekly chart. We'll see how the weekly sentiment has shifted, printing lower highs pretty much all the way down. Then we double topped here and gave a lower low as the market came through. So it's now looking for where the market could potentially form its bottom before we start to reverse and go back to the upside. Now we were looking originally at 14.4. we did see a nice move off 14.4. It rallied a couple of 100 points, and then we took our first TPs and then got stopped on the second position. Now previously when we sent out our NASDAQ buys down at 13,000, yeah, we had that monster move. We got stopped on the initial one, trading this one, and then the second one we caught a beautiful move that ended up going over 2,000 points. Those that got most of that, well done. But now we're looking for that next potential move, and I see a real nice area through here at around 13.8 and just below. You've got a nice zone where we had the double bottom, so we've got the neckline through here. We also then, if this is your X, here's our A. Looking for B confluence coming into that same area. We've got the nice 61.8% retracement, so we've got lots of confluence in and around this 13,800 area. So we want to see price push down into this area and then see shifting sentiment on those lower time frames. So tomorrow I'm going to look for the CPI data to push price lower, and especially maybe through US Open, want to see price really penetrate, push lower, and then whether it's a 5 or a 15 minute, we start to see that shift in sentiment, and we look to buy a higher low as the market moves higher. Now, if the market continues to break and doesn't respect this 13,800 and moves lower, then you know what, I'll sit out of the market and I'll wait for 13,000 to be tested. I won't be looking to be a buyer until the market hits all the way down here, and I'll be looking for the same scenario that I discussed here, and that if you go back to our previous videos when we were talking about buying the NASDAQ or the S&P, look for the same scenario each time. And you know, that's what makes consistent traders. You're not trying to do something new every trade. It's you're basically repeating the same process, rinse and repeat. Now we're going to go back to some dollar pairs to look at. Euro and cable are two of my favorites. Euro, we sent out in our watch list that if we broke above 108.80, we'd look for a retest to trade it up to 109.40 on an intraday basis. This was sent out to our members last night, or Sunday evening I should say, and that happened, but price failed to break through 109.40. So we've seen sellers come into this area, and you can see we've got a wick low, and the market has tested it several times and then come back down. Now where we currently sit, if we go out onto the weekly chart and we zoom right out, you know, we called the reversal here a few weeks back, and you know, hopefully everyone that sort of traded with us on this one got some really nice points out of it. But the market's coming back to test this same area, and at the same point we're seeing the dollar index testing 100. It pushed through on Friday and then gave us a really nice rejection day. Sorry, pushed through on Thursday. Friday we saw a big move up towards like well, take a look, it was 100 and I think 0.17. Let's have a look. What was the high last week? 100.18, just short of 0.19. And then when you go to the daily chart, you'll see it was a nice shooting star candle. No real resistance at this point, only the big even handle number. And I'd like to see, now we've seen price sort of come to the midpoint of that candle. Tomorrow I'd be interested in looking for price to come back down at least to 99.3. We'll be a seller of dollars should we get a push through 99.3, because then I would expect to see the market move lower towards this trend line. And you can see if we look at the patterns that were formed back here, we had a nice range being formed, then we had that strong move out, strong close, doji candle, the market gapped up, pushed higher, and then moved down lower and proceeded back to test the trend line. So we've got our range being formed, we've had the move higher, we've had price run up, so now I'll be looking to see the market come back down, maybe test 97.5 before maybe we get that dollar strength resume. Whether we only come back down to 99.3 and go, well, so be it, but ultimately we're just going to trade to a set of rules, and it's an if done scenario. If it happens, we trade it, and if it doesn't, we don't. So you should never get caught on by let's say the only time you'll get caught by doing something wrong is if you let your thought process or your subconscious overtake your brain, your thinking power, because you don't have a plan in place. So you're going to react on dopamine and impulsive decisions rather than a plan or a process to follow. So make sure when you are looking to place any trades, you do have the plan outlined in black and white, a checklist. If this happens, I do that. If this happens, I do that, and then you place the trade. regardless of what you think, what news is being released. You just trade the plan, and that's what we call technical or mechanical trading. So that's looking at the dollar index and the euro. Cable, we took a trade on this last week. We bought at 1.3. Cable is one of these markets that does like to double bottom or double top before we see a key reversal, key rejection. And we've seen it happen. Whether we move on from this area, only time will tell. We did hit our first target at 130.30 because we've got a 30-point stop and we had a 30-point target on our first take profit. So we bought just in here on Friday. We had our first take profits just up here, which happened in a couple of hours. We left our initial stops where they were, which is at 129.70. So worst case scenario is we finish up with 0 profit and 0 loss. But should the market go on to our next sort of take profit area, which is around 131, then we're making substantial gains. And then we've got extended targets of 134.50, which if we zoom right out, we're effectively looking at the market trading towards the top of this channel. Now, we will be looking to add into this market, and we will be looking to add in should price break above 131, and that's also this descending trend line here. We want to see price push through this area, push through this soft or minor level here, and then give us a higher low to work from and trade up. Bear in mind we've got the monthly pivot here that could cause a few problems to get through, but I can't see why we can't get up towards 134 in and around this area before the month end. You know, according to seasonal analysis, we should see some strong moves, which, you know, we've been highlighting now, and we're yet to see it, but we have been discussing this for the last week or so. But, you know, we can't predict the movement that the markets make. We can only sort of work with data that we have, and then look at the technicals, and we trade accordingly. And whether it does 200 points in one day or whether it takes 10 days to do 200 points, we can't forecast that. What we can say is we're looking for it to get to here by month end, and we have a trading management system that will keep us in the trade according to price fluctuations, whether it's daily candles or swing management techniques on a smaller time frame, hourly or 4 hourly. But then you get a deep correction, it takes you out, and you know what, you get taken out, you might make no money, you might lose a little bit, you might make a little bit, but ultimately, even if you followed your set of rules to manage that trade, price, if you left, say, the stop where it was the whole time, could just run up and have got you to the target. But you don't know that, and you don't know how the market's going to move. So that's why it's always important to have your rules defined before you enter a trade, so you're not guessing every day, oh, shall I move my stop? I hope that makes sense. I know I've probably talked a little bit longer than normal about trade management, etc. But yeah, still looking for longs on cable. And then obviously the other market that sort of sits quite nicely with a risk off market will be the Aussie yen and Kiwi yen. Aussie and Kiwi, if I just go to the main charts, we'll look at I'll let you look at the yen pairs on your own, but I'm just going to focus on Kiwi dollar and Aussie dollar. You can go to the weekly chart, and I want to show you last week's candles on both markets and where they currently sit within a bigger picture. So we've got a broadening descending channel, but if we look at last week's candle, that's this big black bearish engulfing candle here. So in theory what happened is it took out the previous week's highs, so it created a higher high, and then it closed below the previous 2 weeks lows candles. So printing a big bearish engulfing candle. We've got our ascending trend line here, which you call it a counter trend line, and then this week so far we've broken the low of last week's candle. So that's adding to more confluence that we're likely to see some more downward pressure in Kiwi. Now the question is, when Kiwi moves, how do you best trade it? Well, it's one of those markets that when it moves, it can move quite aggressively with very shallow pullbacks. So things to watch out for will be a potential break of this structure through here, through the evening, and looking for market cycles on a 15-minute or hourly tomorrow. Alternatively, if we do get that move just a little bit lower, we could look for a little pullback into this area around 68.60 should the market give you that opportunity. Whether it does or it doesn't, I have no idea, but you know, I'll be looking at 15-minute cycles to get short should we break through these lows, or I want to see a little bit of a higher correction into the 68.60. And Aussie was very, very similar in terms of the weekly outlook and how the market's moved, which if we look, we've got a key structural point here around just short of 76, so 75.70. We see lots of resistance, big candles here, and then here if we look at this, we've got the big bullish candle coming into resistance followed by a doji, and then this huge fake out, so catching loads of traders on the wrong side of the market. And then we've broken today's last week's low with today's movement, so it's all looking good for more downside for Aussie dollar. So the question is, how would you look at potentially trading this? Well, if we go over to the 4 hourly, you've got a nice little bit of structure to work with here around 74.70, so it's around 50 points higher than where we currently sit. If we see that move, could we get that from CPI data tomorrow? Who knows, but there was a nice little trade through here for anyone that caught that last week. Probably a little bit aggressive for my liking. I like to see a little bit more confluence, so now we've got that, I'm looking for the retracement into this structure where we can then start looking for that nice bearish setup, looking for those sellers to come in to trade it down, and looking for whether it's around the 73 even handle. So a nice, what's that, it's about 140 points potentially up for grabs should price come up to the 74.50 area. Okay, that's a long enough video for tonight. We'll come back tomorrow after the CPI data and see what's actually happened, see if we've got some of those moves that we've discussed about. And guys, if you did see the video on BTC, next stop to 39 will be 39k. Hopefully some of you took notice of that and have traded accordingly. We're seeing Bitcoin drop 2,500 points today, and it does look like the next stop will be 39k. If you've enjoyed tonight's video, give us a thumbs up, hit like, share and subscribe. Why would you do that? So you get every video we publish straight to your inbox and you don't have to search for any of them. And any comments, please post them below. We'll answer them, or if you want us to do analysis on a particular currency pair, commodity, anything you want us to do, just drop it in the comments section below. We'll try and provide you that analysis in one of our next upcoming videos. So take care and we'll see you tomorrow, guys. Bye bye.